What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today we saw a strong bounce in the stock market across the indices. And the question is, are we going back on the bull from here, or is this just a bounce before we go for another leg lower? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we had a strong bounce going up 1.23%. But we still see the price action closing below that 20 simple moving average, and we're also below the 5 and the 13 EMA. So while this was a strong bounce, we still have price action below our 20 simple moving average, and in every bull market we really want to see the price action above that 20 simple moving average. So to get the full bullish price action, we really want to see confirmation of a break and close back above 466, which is going to be that critical resistance level that we do want to close above. You could see today's candlestick is definitely a doji candle with a large wick on the top and bottom of the candle and a small body. So there's plenty of indecision on where the stock market's going from here. Therefore, you should not be over leveraged in either direction. Remember, we're still in a macro level bull market, so the bias is definitely still in the upward direction. Until we lose the macro bull trend, it's more than likely the price action will continue to climb higher over time. However, on the daily chart, you can see that we did lose the bull trend and we did not gain the bull trend back just yet. So the first thing we need to see is price action closing back above 466, and that will be our first bullish indication that we're starting to break out and going back on the bull. You can see that we did go up on some pretty nice volume today, but we still don't have that confirmation just yet. We are back above 462, and we do see the Bollinger Bands continuing to expand. So eventually we are going to see a monster move in either direction, and it's just a matter of which direction we break out first. So with the price action where it's currently sitting right around 464, I'll give you two critical levels to pay attention to. Watch that resistance breakout level at 466 and the support breakdown level at 462. Below 462, we're very likely coming to the 50 EMA, which is sitting right around 457. And above 466, we're very likely attempting to break out to new all-time highs with resistance at 471 and the price target at 477. Remember, I don't really like giving you brand new all-time high price targets while we don't have the bull trend. So right now, just pay attention to 466 and 471. Also remember that if we do break down and we do start slicing through the 50 EMA, you need to start watching for the potential of a deep stock market correction to close all these gaps below. And that is something that's a very real possibility, but don't focus on those gaps if we're trading above the 50 EMA. On the triple Qs, we were up 2.17% today, so we definitely see the tech sector leading the way. And this is definitely a very bullish indication for the whole entire stock market together. You could see the price action is above all the moving averages. We did successfully test that 20 simple moving average as support and did bounce off that level, and we closed back above all the moving averages and maintained the bull trend. So by far, if you're looking for a reason to be bullish, you would use the triple Qs as your bias, because this index is telling us we're very likely getting ready to break out. The confirmation will be a break and close above 401, and then we basically have blue skies to brand new all-time highs, which is that price target up there just below 410. So on a breakout above 401, the triple Qs are looking very bullish, and the critical support level is right around 396. If we break below 396, we still have our support trend line, so that could still hold up as support right around 392. And below that, we're going back down to the 50 EMA right around 384, but we will have a strong support level on the way there at 387 to 388. So there is still a ton of support for the bulls to work with, and you can see the triple Qs are still in a daily bull trend. So the triple Qs are very likely going to continue to lead this market. So look for that confirmation breakout to be overly bullish above 401 and to start getting a lot more defensive below 396. You can see the Bollinger Bands are also squeezing on the triple Q, so a big move is brewing and we are about to see a breakout in either direction. On the Dow Jones, we bounced 0.62% today, and we did close back above 351 and did close some of that gap above. Remember, the gap doesn't fully close until we get back up to about 356, and our 50 EMA is sitting at 355. So critical resistance on the Dow Jones is going to be back above 355, and the Dow Jones will look a lot more bullish if we can close back above the 50 EMA. The critical breakout for the bulls will be back above that 20 simple moving average at 359. So on a breakout back above 355, look for resistance at 359. However, if we don't fully close this gap, that means the bears are in still full control. So look for a rejection at 455 to retest some of these support levels. We'll be looking for a higher low if we do get rejected, which means we need to see support holding up at 351 and 349. If we break below 349, it's almost a guarantee that we come down to close the gap at 344. So look for that as the most critical support level in the Dow Jones. In the Russell 2000, we were down today, going down 0.06%, but still closing on top of that critical gap close of support right around 222.6. You can see we have a confluence of support here where we did close the gap. We have a support trend line, and we also have the resistance trend line breakout. So we have 3 strong support levels keeping IWM from falling any farther. If we do close below 222, that will be extremely bearish price action, and it does mean the Russell 2000 is very likely coming all the way back down to about 213. So on a breakdown below 222, you're looking for strong support around 213. However, we still have a gap to close above right around 229, and our 50 EMA as resistance is also around that zone between 229 and 230. On a breakout back above 232, the Russell 2000 is looking a lot more bullish, and a close back above the 20 simple moving average means we need to close back above 235. So critical resistance is right around 229, 232, and 234 to 235, with the critical support level at 222, otherwise we're very likely coming down to 213. Also pay attention to the Bollinger Bands on the Russell 2000, and you can see they are expanding, which is going to allow for a very volatile movement in the market, which means we could go up or down in very large swings, which makes this a great day trading stock at this time. Jumping over to the ARKK ETF, we were down 0.19% today and still closing around that support level at 107. So that support level is holding up for the time being, but there's no guarantee that we have to stay above that level if we don't start to see a strong bounce soon. A bullish breakout will be a close back above about 111, but we still have plenty of resistance to the upside right around 114 and the 50 EMA at 116. We really need to see the ARKK ETF closing back above 119 to start reversing this bear trend, and we are very close to having the bear trend once that 20 simple moving average crosses back below the 50 EMA. So on a breakdown below support at 107, it looks more and more likely that ARKK is continuing to trend lower down to that support level at 99. So right now we're looking to see if this is a 3-wave move lower, or if we're about to go up for a 4th leg before we see that 5th leg lower down to the support level at 99. So on a breakdown below 107, get a lot more cautious because we're very likely going back down to 99. On the VIX, we were down almost 20% today, so we definitely see the VIX getting crushed after we saw that very scary looking breakout above 26. Remember, on Friday, the VIX closed above 28, which is really getting up there in those black swan levels, and we don't want to see the VIX getting into the 30s and 40s. So right now, the VIX is looking like that was all just a false breakout, but we still want to see confirmation with the VIX closing back below 20. So right now, with the VIX above 20, you still need to be very cautious, because as I always told you, once the VIX gets above 20, we need to be a lot more defensive about a deeper pullback or a stock market correction. So continue to watch the VIX, and remember that it's bullish if we close below 20, and it's absolutely something you need to pay a lot of attention to if we start closing back above 26. As long as the VIX is above 20, I want you to remain defensive, but if we get back above 26, I really want you to get even more defensive because we could see a much deeper sell-off. So watch those critical breakout levels at 26, and the bullish breakdown will be a close back below 20. On Bitcoin, we're currently up just over 1.25%, and we do see Bitcoin bouncing off of that support zone right around 53,000. Remember, Bitcoin is very easy to watch right now because we're looking for the bullish breakout above 60,000 or the bearish breakdown below 52,000. Right now, Bitcoin is not doing us any favors by giving us any clear evidence of where to expect the markets to go from here. We're currently still forming lower lows and lower highs, and we don't really have a clear direction until we break out above 60,000 or break down below 52,000. So continue to watch those critical levels, and I do think Bitcoin will give us an early warning sign on where the stock market is heading. Bitcoin is a great indicator for risk on or risk off sentiment, and right now it does look like Bitcoin is leaning towards risk on. Wait for that confirmation though in the breakout above our resistance trendline and a new daily higher high to know for sure. On Amazon stock, we were up 1.63% today, and we still see Amazon's price action looking bullish, with the price action above all the moving averages sitting right on top of that 5 EMA, and we're still holding on to that full bull trend. The bullish breakout on Amazon will be a close back above about 35.85, but as long as we have this bullish trend, you can still buy the dip. The strongest support levels will be right around 35.20, 3,500, and the 50 EMA right around 34.60. As long as we're staying above the 20 simple moving average, I think you need to be bullish, but if we start closing back below the 50 EMA, you need to be a lot more cautious because we could be coming back down to 3,400, which is also going to be right around our support trend line. If we break that trend line, we could be coming back down to about 33.11. On Tesla stock, we had a very bullish day today, going up over 5% and closing back above the 20 simple moving average, but I still don't want you getting overly bullish. It's very likely we're still going to stay in this consolidation wedge, which could easily take us out to about the middle of December. So right now, look for this possibility that we're forming this bull flag, which means we still have to get to the upper resistance trend line and take one more trip back down to our support trend line. And then we should see if we're going to get a breakout above 1240 to send us to our next price target at 1400, or a breakdown below 1000 to come down to close these gaps right around 843 or the $900 gap. Either way, you're going to know which direction Tesla is going to go if you're just patient and wait for the breakout confirmation. If you're trading Tesla in this range, you're looking for a range between about 1070 to about 1180, and that's where Tesla is more than likely going to stay range bound until we can eat some more time off the clock. We don't have a bull trend and we don't have a bear trend, so the more likely scenario is that we just continue to go sideways. Jumping over to Apple stock, you can see that we were up 2.19% today, closing back above all the moving averages with the price action and still holding on to that very strong bull trend. Remember that Apple is a market moving stock and it's definitely looking very bullish, going up today on increasing volume and very bullish price action. So remember, on Apple, if we can close back above 162, we'll start closing at new all-time highs with price targets at 166 and 168. I think you need to buy the dip off of any of these support levels, which are 157 and 154. And as long as we're staying above 154 with the bull trend, there's no reason to believe that Apple stock is not going to continue to climb higher. If we start closing below 154, then you can get a lot more cautious. But so far, it looks like a successful bounce off of the retest of the previous all-time high, which is definitely bullish price action with a very strong bull trend. On the financial sector, we were up 0.31% today, but we still see price action closing below the 50 EMA for 2 days in a row. So this is definitely not a bullish look for the financial sector. We need to see the bulls getting back over that 50 EMA and trying to close this gap above. The industrial sector was up 0.17% today, but very similar to the financials. The second day in a row closing below the 50 EMA, so the bulls need to get back over that moving average and close the gap above. The healthcare sector was up 0.27% today, still closing above the 50 EMA, but still closing below the 20 simple moving average, so it does look like it's stuck in a consolidation. The energy sector was up 0.58% today, closing back above the 50 EMA, but clearly getting rejected at a negatively sloping 20 simple moving average, so it definitely looks like the energy sector is losing some momentum. So jumping back over to the S&P 500, there is definitely a lot to be cautious about in the stock market at this time. As you can tell from the sector analysis, there's really no straight bullish look in the market any longer, and we really only saw the tech sector carrying a lot of the weight today. So if you see a lot of money just flowing into the tech sector and leaving all of the other sectors, that's not what we want to see if we want to be a stock market bull. We really want to see that money going to all of the sectors and being spread around evenly. We don't just want to see the highly liquid names in the tech sector getting all of the money. So by far the tech sector is leading the way higher, but we really need to see the stocks in the Dow Jones and the rest of those sectors starting to join the rally soon. We don't want to see the Dow Jones and the Russell 2000 going into bear markets just as we start to see all the tech sector rallying. That's more than likely not healthy price action for the broad stock market, so it's definitely something we'll want to pay close attention to. So just be very cautious at these levels and don't take on too many risks, and at least wait until we can see SPY getting back above that critical resistance at 466. Just continue to watch the price action each and every day and stay objective. From these levels, I could honestly see the stock market going in either direction, even though I am starting to lean towards the bullish side after the strong bounce today, but I really want to see confirmation and a follow through with tomorrow's price action. So stay objective and make sure you watch those critical levels, because the price action cannot lie to you, and you'll always know which direction the stock market's going if you just follow the price action. Remember, as I always say, everything else is just noise. Stay objective and follow the price action at those critical levels. Also remember that I am still running that Black Friday deal on Bank Trade Alerts, which is an algorithm-driven trade alert service that sends all of your buy and sell alerts directly via email and text message, and it only trades the ETF TQQQ. So if you want to claim that Black Friday discount code for 67% off your first month, you can find out all of the details on how to get the discount and how to join Bank Trade Alerts by clicking on the links in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.